Good morning, Chairman.
Morning, everybody. Welcome to this virtual meeting of the Overview and Scrutiny Management Board. My name's Councillor Robert Parker and I'm the Chair of the Board. Welcome to all members and officers in attendance today. The audio feed of this meeting is being broadcast via the County Council's website. I'd also like to welcome members of the press and public who may be listening to our meeting online today. Anyone invited to speak during today's meeting should unmute their microphone and switch on their camera. Could you turn off your camera and microphones when not participating? Today we will be conducting a roll call voting for the minutes and the pre-decision scrutiny items, which are agenda items 3, 8, 9, 11 and 12 on the agenda. The rest will be agreed by dissent using the chat function. If you want to speak, please use the chat function and type speak as a command. All officers and members are welcome to use that chat function, and requests to speak will be collated by the Vice Chair, Councillor Ray Wotton. Nigel West, Head of Democratic Services and Statutory Scrutiny Officer, will indicate in the chat when a new item has begun. If you experience any IT issues during the meeting, please end the call using the red phone icon and rejoin the meeting using the link previously provided. If you do experience connectivity issues while speaking, please turn your camera off, as this may help. If you continue to experience IT issues, please contact Simon Firth, IT Engineer, for assistance. Can I also ask that members who are intending to leave the meeting or are returning to the meeting indicate using the chat function? Officers don't need to do so. Okay. Can we begin then by me asking Nick Harrison, Democratic Services Officer, to confirm the presence of all members in attendance at the meeting today? Nick.
Thank you, Chairman. Councillor Ray Wotton.
Present.
Councillor Mrs Brockway.
Present.
Councillor Kendrick.
Present.
Councillor Macy.
Present.
Councillor Marfleet.
Present.
Councillor Mrs Newton.
Present.
Councillor Oxby.
Present.
Councillor Pepper.
Present.
Councillor Rowe.
Present.
Councillor Strangle.
Present.
Mrs Machin, Parent Governor.
Present.
Thank you. Ms Alex Sayer, Parent Governor Representative.
Present.
Thank you. Reverend Philip Johnson. And Chairman, we might have some added members. I can see Councillor Whittingham. Councillor Whittingham?
Yes, present.
Thank you. That's all I can see in the present.
Thank you. Okay. So can we move to the agenda then, please? Item 1 is apologies for absence.
Chairman, we've got apologies from Councillor Bob Adams and Mrs Wendy Boquet. Councillor Oxby is deputising for Councillor Mrs Boquet, and Councillor Rowe is deputising for Councillor Adams.
Thank you.
Chairman, Nigel Pepper here. Can I just say, depending on what time the meeting finishes, I may have to leave early.
Thank you for telling us. Appreciate that. Anybody else want to make a similar declaration? Nope. Okay, thank you. So we now move on to declarations of councillors' interest. If any member would like to declare an interest on any item on the agenda, can you indicate in the chat box now by typing speak?
Non-indication, Chairman.
Thank you. Okay, moving on to item 3. Minutes of the meeting of the Overview and Scrutiny Management Board held on the 28th of January. We're here to confirm and sign the minutes from the meeting of the board as a true record. So I'll go through each page one at a time, and if anybody wants to comment on accuracy, then please indicate. So page 5, page 6, page 7, page 8, page 9, page 10, page 11, page 12, page 13, and finally page 14. Okay. Do I have a proposer and a seconder for the accuracy of the minutes, please?
Yes, Chairman, Councillor Raywood and Vice Chairman, happy to propose a true record.
Thank you.
Chairman, happy to second Councillor Macy.
Thank you. Okay, we'll now vote on the minutes. You're voting on whether you agree that the minutes are a correct record. Nick will call out the name of each member present in alphabetical order, and you're asked to say for, against, or abstain. Nick.
Councillor Mrs Brockway.
For.
Councillor Kendrick.
For.
Councillor Macy.
For.
Councillor Marfleet.
For.
Councillor Mrs Newton. Councillor Mrs Newton. Councillor Parker.
For.
Councillor Pepper.
For.
Councillor Strangle.
Abstain as I wasn't present.
Okay, thank you. Councillor Wotton.
For.
Councillor Mrs Machin. Sorry, not Councillor, Mrs Machin, sorry.
Thank you. For.
Thank you. Ms Sayer.
Abstain.
Thank you. Just going back to Councillor Mrs Newton. No, that's carried then, Chairman.
Thank you.
Mr. Chair, if I might, I was at the meeting and my name wasn't called out there, but I will abstain as I wasn't there for the whole meeting. That's Stephen Rowe, Councillor Stephen Rowe, sorry.
Thank you for that.
Chairman, Councillor Ron Oxby here. Do I need to have my name called as an abstention as I wasn't present, but present at this meeting?
If
Just
you
for the records.
abstention recorded, that's fine by me.
Okay. Thank you, Chairman.
Thank you. Okay, so that's it. The minutes have been agreed. Okay. If we could move to item 4, that's to do with announcements by the Chair, Executive Councillors and Chief Officers. If I could go first. I attended the meeting of the Executive on the 2nd of February and presented the comments from the Board on the budget proposals and the performance reporting against the Corporate Plan Performance Framework, which we discussed at our last meeting. I highlighted our suggestion that it would be helpful to have planned milestones included in future reports. And it was good to know that these have been included in the Q3 performance reports on today's agenda. In relation to the Councillor call for action that we considered and agreed, it was referred to Highways and Transport Scrutiny Committee, and they will be considering the request and our advice at their next meeting on the 8th of March. Okay, that's as much as I want to say. Any executive councillors or chief officers here that want to make an announcement to bring to our attention any particular issue?
If I may, Mr. Chairman.
Sure, of course. Mark.
Thank you, Mr. Chairman. It's in relation to items 7, 8, which is the Treasury Management Q3, the Treasury Management annual review, and 4 planned for 21-22, and for items 11 and 12, the revenue, the Q3 revenue monitoring, the Q3 capital monitoring. Councillor Hill, designated councillor, has asked me. I have been through all of these papers on Councillor Hill's behalf before the papers come here, and I'm happy with them. There's been a few changes, a few minor tweaks regarding the capital strategy for next year, but I'm sure that Karen Tong will cover those in her presentation. But they have been pre-reviewed by me prior to this meeting. Thanks, Mr. Chairman. Thank you.
I'm sure, Mark, if you want to comment on each of those individual items and bring anything to our attention, you're very welcome to do so, and we'd appreciate it. Okay, executive councillors dealt with. Chief officers, does any of our chief officers want to make any contribution?
Nothing from me, Chair, thank you.
Okay. Andrew, James?
Nothing from me, Chair, thank you.
Nothing from me either, Chair. Thank you very much.
Okay, that's fine. Thank you. Okay, so we move to item 5. Nick, in relation to consideration of call-ins, have we received any call-ins?
No call-ins received, Chairman.
Thank you. Item 6, consideration of councillors' calls for action. Nick, has lightning struck twice in 2 months? Have we had any call-ins?
No call-ins, Chairman.
That's fine, thank you. If we now move to the first of the substantive items on the agenda, which is the Treasury Management Performance Q3 report up to the 31st of December for the current financial year. Here we've got the Treasury Management activities and performance, and Karen Tong is going to take us through the paper that we've got. Karen, over to you.
Thank you, Chairman. Good morning, everyone. Hope you can hear me okay. This is the usual Treasury Management quarterly update report for Q3 that details activities and performance for the end of December 2020. And it compares this to the Treasury Management Strategy for 2020-21 that was approved by the Executive Council for Resources this time last year. As usual, the report is split into 3 main areas: interest rate forecast and economy, investments and borrowing. So I'll pick out the main points in each area of the report, starting with the interest rates in the economy. Both the short and long-term rates were not expected to rise significantly over 2020-21 at the time that the strategy was set this time last year. If you look at the Appendix A on page 21, I believe, the graph in Appendix A at the top of that shows that this has indeed been the case for short-term rates, where they've remained relatively flat over the period. Base rate is expected to remain at 0.1% for a considerable period of time, actually. And LIBOR rates, short-term rates, are running close to zero, with LIBOR being negative now. The Bank of England using negative interest rates as a monetary policy tool has been ruled out for the time being. But saying that, a lot of our liquid assets, liquid investments are running at zero now already. So, a fairly bleak forecast for short-term rates. Looking at long-term rates, you can see from the graph on that appendix that they were relatively flat throughout the period until the 26th of November, where they were all cut by 1%. Following the decision from the PWLB to alter its policy in that regard on its borrowing. So that brought long-term rates to all-time lows at that point in time of around 1.3% for 50-year lending, for example. So the interest rate forecast shown in the appendix at the bottom there, the table, is provided by Link Asset Services, our Treasury Management Advisors. I'm pleased to say Chris Scott is here today and is going to comment on the strategy in the next item. That interest rate forecast was dated 25th of November. It's since been revised. A new forecast was published in February. I'll detail that in the next item more predominantly, but it has meant that interest rates on the long term have sort of increased recently for various factors, mainly announcements in the timing of easing, commodity prices, US gilts and things. So they have increased since this forecast here. But it's worth noting that Link still don't expect borrowing rates to sort of increase significantly over the rest of the year by no more than 0.1%. and they expect this increase to be corrected throughout the year going forward. So moving to the economy, as we know, the hit to the economy, jobs, inflation from the national lockdowns due to the COVID pandemic is evident, but hope really is a recovery is pinned on the vaccine rollout, which is being successful. And the Bank of England is quite optimistic in its last meeting that we could return to pre-COVID levels by as early as January 2022, with continued fiscal support from the government, that is, to support jobs, businesses, etc. The budget in March, the Chancellor will announce his latest measures to do that, so that will be the case. Moving on to investments, Appendix B on page 25 of the report shows the position of the investments at the end of December. It's the usual report that I do, and you will see that investments have remained at a high level of just over 368 million at that point. And that's due, as reported previously, to government grant funding received for COVID, but not yet expended. But the return on these investments continue to exceed benchmarks due to the weighted average maturity being longer, and stood at 0.58% at that point in time. But you'll notice from the graph that on the left-hand side at the top on that appendix that the yields have fallen over the period, as identified by the falling blue line on that graph. But at the same time as investment balances have risen over the period. So the current yield, as we speak, is around 0.3%. So they are falling. The other point to note on the return is the different types of return achieved for different types of investment. And if you look at the box on the bottom left of that appendix, you'll see that the returns for liquid assets such as money market funds are yielding 0.2 at that point in time. They're actually mostly zero now. So the different types are yielding different types of return, and that unfortunately is at a time when we're having to keep a lot of investment fairly liquid due to the uncertainty in cash flows at the moment. Future, I mean, this has been managed, but future interest budgets have been reduced accordingly, not expecting to yield much return in the period and over the next few years. Appendix D on page 34 and 35 show a full list of the investments that we held at 31st of December. And you can see from that list that lending to other councils is quite significant as a proportion to the total. It's around about 45% of lending now to other councils as opposed to banks. Bank lending has fallen during the period due to the low returns offered in the market from the banks who don't really want cash at the moment. But lending to councils is deemed as government risk, which is low, so this is good. It's the lowest credit available. However, some councils have hit the news in recent times with financial difficulties, and this has increased to the reputational risk of lending to councils. But I must stress that investments are not seen at risk, as councils under legislation cannot go bankrupt, so there's no concern about the credit risk of lending to councils. Then moving on to borrowing, the Appendix E on page 43 shows the borrowing position for the council at the end of December, and it shows that no external borrowing has been undertaken at this time, and borrowing stood at just over 490 million, and is at a cost of 3.7% at this time. It has been decided to take the remaining borrowing requirement, adjusted borrowing requirement, in internal borrowing to the end of the year. So no external borrowing will be taken this year. That will have various effects. It will utilise the excess cash that we're currently holding at the moment, whilst at the same time avoiding cost of carry on borrowing taken and not yet used, and it saves on interest borrowing costs, obviously. So projected end of external borrowing at the end of the financial year is expected to be just over 487 million to this strategy. You'll see that the graph at the bottom of that appendix shows the maturity profile of the council's existing debt, and the aim of the strategy is to keep an even maturity profile, and then that demonstrates that is the case. And finally, some temporary borrowing of just over 40 million has been undertaken during the period at a really low cost of 0.09%, and this is to manage liquidity shortfalls throughout the period, and this is a usual strategy that we take to manage the peaks and troughs of liquidity, whilst borrowing is so cheap and less than fixed deposits. So this borrowing is expected to be repaid by the end of the financial year. So these are the key points to mention covering the activity to the end of December. So I'll be happy to take any queries or questions. Thank you.
Thank you for that, Karen. Thorough and clear. Ray, have we got any of the speakers?
Yes, Chairman, thank you. We've got Councillor Jackie Brockway.
Fine. Jackie, over to you.
Thank you very much, Chairman. You've actually answered one of my questions. Thank you for this report. I was going to ask about the temporary borrowing, but you've answered that. But I first say thank you very much for the way this report is laid out. I find the strategies at the top of the page very, very helpful, and that green line demarcating. So just a bit of feedback there. On the Link Group report, you've got the investment list page. And I was very interested to see the two councils, Woking and Cardiff, are offering substantially good returns on our money, 1.55 and 1.42, I think it is, considerably more than some of the other places. For instance, we're investing in London Borough, Barking and Dagenham, and they're 0.05. And I was wondering, are we not able to go a little more with these people who are giving us more money back? And how are they achieving that? Because they're councils. So how are they able to offer such good rates? I was very interested in the huge range of those figures. Thank you.
Yeah, the timing of when lending was taken is significant in that respect. The timing is taken all throughout the period. So those high rates that you can see, well, I say relatively higher than what we can achieve now. We're on investments that were taken quite a while ago, and the rates have since moved on. So you're not looking at a consistent picture of everything being taken at the same time there. So that the lower rates there are you'll probably mean that they started a bit later on when rates had dropped in the market. So that's the reason for that, and also the other reason that affects the yield that you get is the length of the investment over time as well. So that those higher rates were probably for one or 2 year investments as opposed to short-term ones. So there's all different factors that affect the rates, but that is how when I mentioned the weighted average maturity of the investments, the length of those investments have an effect on that. and that is how I'm managing to beat the benchmarks. Basically, is that you know those historic investments that were at higher rates are still there, and once they drop out of when they mature, that the yield will go, you know, the overall average yield will go down. So that's you know that's the result of how we're managing the performance at the moment, is because we've got some still historic investments at higher rates. Question.
Thanks for that, Karen. Ray,
sorry, Mr. Chairman, if I may add something on that, if what Karen has said. On a monthly basis, Karen sends me. Karen does an update on a monthly basis of all of the local authorities that we're lending to, and she sends it over, and I look through it, and I monitor sort of publications such as Public Finance and various other sort of the LGA news and all that sort of stuff, and also I found Private Eye very useful source of information about councils, just to try and check to see if any of the councils we are lending money to potentially might cause a reputational risk. I know we've discussed previously we've loaned money to Croydon Council, so we are trying to do some pre-verification checks, and we've actually signed up, Mr. Chairman, the credit rating agencies such as Fitch's and Moody's. They obviously do risk reviews into all the major financial institutions. There's not really a similar body for local authorities, but there is currently a pilot scheme that's been launched amongst local authorities to try to do a lot of this sort of this verification work of the risk and whatever of loan to local authorities, and we've decided to sign up. There's currently a pilot scheme, and we've signed up on that, Mr. Chairman. So just to give the committee a little bit of confidence that we are doing everything we possibly can to ensure that that we minimise the reputational risk to the council. As Karen has said, there's no financial risk because everything ultimately is underwritten by the government, but it's the reputational risk which we're trying to which we are trying to minimise as much as possible. Thank you.
Thanks for that. It's really useful, Mark. Thanks for telling us. While we're on this subject about councils, I would just want to ask Karen about the point you made about our lending to councils is increasing and increasing. And I think you mentioned a figure of 45% of our lending is to other councils. I know it's safe in the sense of that it's underwritten by the government, but do we have any limits, control mechanisms over the amount of money that we lead? Because I got that when we loan it, we have restrictions across different, should we say, potential organisations we're lending to. Do we cap at all on the lending to councils?
Yes, we do. On the that's shown on the lending list. All councils at the moment have a 20 million limit per council and a maturity limit of up to 2 years. So that is the highest limits that we have across the board, and that reflects the low risk that the councils are. But yes, they're subject to limits as in any other counterparties on our lending list. So it's 20 million at the moment per council. Yeah.
In addition, and perhaps this is what I was driving up, I didn't explain it too well. 45% is the figure that I was interested in as a cap. Do we cap the percentage of lending to councils? When it's councils as a whole that I was thinking of.
Yeah, right. No, not as a sector as a whole. But we've got a cap on individual institutions of 20% of total funds, but that excludes government investments. So no, there is no overall cap on the sector, and again that reflects the low government risk that they have. It's not seen as an issue, for that reason.
to follow that on, because it's low risk, then is it in our interest to continue to to lend as much as possible to councils at the should we say sacrificing any other sector that we could be lending to?
The lending really is driven by the return. So I don't look at the sector. I just look at, whether they're offering a decent return against the benchmark rates. So if that means that councils will get most of our money at some point in time, that will be the case, and that's certainly been the case recently because they've been offering the best value in the market. But if banks yields improve, then we'll concentrate on that. So it's not a factor to decide where we lend investments. It's the return that decides that.
But it is interesting to think of local authorities being the best market because they're offering the highest rates. I mean, that's something. Okay.
That is unusual. It's not been the case before. Usually low risk means low return, but it's not the case at the moment.
Sure, thank you.
If I add one comment on that, I think Karen has covered it very, very well. It's because interest in the financial sector at the moment are so low. The local authorities do offer very good value. Now, potentially, we haven't moved into negative interest rate territory where potentially we might be being charged to hold accounts with financial institutions. If that situation was to materialise, Mr. Chairman, and interest rates would be driven even lower, it might very well be that the best value we can obtain as a rate of return is going to be with the other local authorities. But of course, at that point, potentially there'll be other local authorities who've got surplus cash potentially in the same position as us. So quite how that will affect the rate of return from local authorities in the future, it's very hard to tell. But at the moment, as Karen has said, definitely the best value is just to be found in local authorities. It just depends how interest rates, I guess, in the wider money market go for the next several years. Thanks.
While we're on this subject, one of the things you did say, Karen, is a lot of our assets we're keeping liquid because of uncertainty. Okay, so could you just explain a bit more about, so we are lending to local authorities, and I use this nicely, left, right and centre, in other words, as many as we can find, on the one hand, but a lot of assets, you didn't say how much, but a lot of assets we're keeping liquid because of uncertainty. Now, those two things, have got to be seen next to each other. So could you just explain that?
Yeah. The cash flow over the last year has been turned upside down, really, is the traditional one, because of the timing of grants. Normal grants that we get have changed, and we've had so much additional grants received as well. So that means that the income has flooded into the council's bank, but there's no certainty of when that cash is going to be used in some respect, and it's been difficult. It's been an extra job to track the new profiles of when this grant is going to be leaving. Some grants have been specific for certain things, and there's been a plan of when they're going to leave, but other general COVID monies there hasn't, and it includes loss of income as well. So, and that's very hard to manage the cash flow on income that just doesn't come in, and it's not, when it usually does. So that's created the uncertainty in the forecast. So keeping, we've got to keep a general level of investment in cash that I can get my hands on quite quickly, which is the liquid assets, and we do that by means of money market funds, which are instant access funds that we can draw on daily, and also on notice or call accounts, that have sort of a specific length of term of notice. For example, 31 days running up to 180 days. If you give notice on those, you get those back. So those types is where we keep the liquidity. The money market funds are the lowest yielding now, and as I say, some of them are actually 0%. The notice money is at varying levels, but the appendix B and that back box at the bottom shows that at the end of December, call money's notice money was yielding 0.3, money market funds 0.02. And that appendix actually has a pie graph showing those different types of investments. So you can see 18% was being held in call, just over 20% in money market funds is the mix. Just so we can draw on those if and when we decide to expend this cash that we've received. So that's how I manage that, and unfortunately, the liquidity is yielding the lowest, so it is affecting our overall yield. But and in some cases now they're so low in yield, it costs more to lend the money than it is to get any yield back from it. So we're having to look at that as well, in terms of whether we don't even bother with investments and just leave them in the bank on a certain day, because the cost of moving that investment outweighs the return on that investment. So these sort of factors are coming into play. So I hope that answers your question.
Well, but just one other thing, a lot of assets are being kept liquid because of uncertainty. How much are we talking about?
Have a quick look. I mean, back in December, money market funds were 60-70 million in money market funds. All accounts about 40, I think, split there. So I mean, fixed the council's cash was 40 odd percent. So I think you're talking about another 40% of the total. So that's about 160 million-ish, is it? 150 million-ish of the total of 368 million at December. So it's nearly 40 odd percent of that.
Okay, fine, thank you. Thanks for that. Really appreciate it. Ray, who's next to speak?
I've got no further speakers, Chairman.
Okay, fine, thank you.
Thank you.
So, going once, twice? Right. Thank you for your report, Karen. So, the action required, we've got to note the report and any comments be passed on to the Executive Councillor for Resources and Communications. Okay. We'll agree that in a moment, but Mark, do you feel as though you can pass that on to the Executive Councillor for Resources and Communications, what we're talking about? Or do we want to...
If you want to, Mr. Chairman, as Chairman of the committee, if you want to formally contact Councillor Hill, I'd be, because obviously I don't want to... I wouldn't want to misrepresent anything that was said or agreed on by the committee. So it might be best coming from you, Mr. Chairman.
Okay, that's fine. Yeah, no problem at all. Okay. So I'm proposing that the board notes the report and our comments are passed on to the Executive Councillor for Resources and Communications. Okay. Nick and Tracy have captured what we've been talking about. If you disagree, can you please indicate in the chat box, please? Councillor,
nothing recorded, Chairman.
No chats. Okay, thank you. That's agreed then. And thank you, Karen, for your report. Okay, Moving on, Treasury Management Strategy Statement and Annual Investment Strategy for Treasury Management 21-22. Pre-decision scrutiny. Okay. Some covering reports have changed, Annex A and B, so I hope everybody's got the up-to-date reports which were circulated on Tuesday. This is to do with long-term interest rates and changes that were forecast by Link Asset. Okay, so we've got Karen again, and can I welcome Chris Scott from Link Asset Services, who's with us as well to speak on this item. Right, over to you, Karen, first of all.
Thank you, Chairman. Yes, this is the annual Treasury Management Strategy Statement and Annual Investment Strategy for 2021-22. And this report will be considered by the Executive Council for Resources on the 11th of March for approval. And this board are invited to consider if they support the report and provide any comments as appropriate. I only intend to go through the key points of the report as highlighted in the key points summary on page 46-47. The detail of the strategy is outlined in Appendix A to this report. As Chair said, Chris Scott from Link Asset Services is here today to comment on the strategy and answer any questions you may have with me afterwards. So this strategy sets the framework for how we manage the cash flows, borrowings and investments and risk of the council. And as you see, the sums involved are significant. Just point out that it relates to Treasury investments only. Non-Treasury investments made for service regions have a different risk profile and are covered in the capital strategy that's included along with the council's budget. As you know, the performance against the strategy will be reported quarterly to the board throughout 21-22, having just had the Q3 report for the previous year in the previous item. The strategy is also broken down into the three main areas, namely the prospect for interest rates and economic commentary, borrowing strategy, and relevant factors, including the minimum revenue provision policy and the investment strategy, relevant factors, including the annual investment strategy. And those update reports are tried to group in the same way to keep it simple. So we'll start with interest rates and the economy. Short-term interest rates are unfortunately forecast to remain exceptionally low for a considerable period of time ahead. And Annex A shows this. That this is one of the updated reports we received recently. The interest rate forecast is provided by Link, and as I mentioned previously, they revised this in 9th of February as after the Bank of England's MPC met. So they updated their interest rate forecast, and so I provided that update in those additional reports. So Annex A shows the forecast short-term interest rates, and you'll see there that base is expected to remain at 0.1 for the next three years. But as I mentioned previously, negative rates have been ruled out for use by the Bank of England as a monetary policy tool for the time being. But like liquid short-term assets are already yielding zero, and benchmark rates are already negative. So exceptionally low interest rate environment for the considerable future is short-term rates. Long-term rates have risen, as I mentioned recently, due to various factors such as the timing of QE, to be spread over the whole of the year instead of upfront, and increases in US gilt yield and increases in commodity prices. All these are affecting long-term rates at the moment. The latest link forecast is shown in Annex A2. This is the revised one that we sent out. Link are expecting this increase to be corrected somewhat throughout the year, and they have already commented that the long-term rates are going to be volatile. But they still, on their forecast, don't see them increasing by any more than 0.1 over the year. I'll just point the target rates for borrowing provided by Link are shown in the table on page 64 of the appendix. So they've been increased slightly in the report. Optimism for a return to pre-COVID levels for growth in the economy are being banked on the vaccine rollout, as I say, which seems to be successful, is going well. This will require continued support from the government to protect jobs, businesses and consumers, which will be outlined by the Chancellor in the budget in March. But there is optimism that we will get back to where we were prior to the COVID pandemic. We move to borrowing now. The Council has again a significant borrowing requirement in 21-22 of 111 million, just over, to meet capital expenditure plans. This is shown on page 58 in the table on that page of the appendix. So significant amount to borrow again for 21-22. Setting prudential indicators ensures that the Council's borrowing plans remain prudent, affordable and sustainable. Annex C of the appendix on page 85 shows the Council's prudential indicators that have been set for the period. Prudential indicators are also explained throughout the appendix as well, because they have an effect on how we set our strategy. You'll see on page, or the prudential indicator 5 on page 60 of the appendix shows that the cost of debt repay or minimum revenue provision plus the borrowing interest will remain well within the 10% limit of the Council's income, and this is aided by long-term interest rates being historically low, and also our strategy on internal borrowing, which I mentioned, has been increased to 25% of the total borrowing need. The table on page 59 shows that the increased internal borrowing strategy still allows for a sustainable level of cash being maintained to cover liquidity of around 200 million. That's the green line at the bottom of that graph, and that's because of the increased cash levels, as I mentioned, that we're running at the moment. In addition, in 2021-22, we're going to do a review of the Council's minimum revenue provision policy, and this will be undertaken in conjunction with Link Asset Services to see if any savings can be made can be achieved in debt repay provision. The Council's current policy for minimum revenue provision is shown in Annex D on page 87. And basically it shows how the Council sets aside cash resource from revenue to each year to repay its borrowing. So a review will be done on that to see if we can alter that provision favourably. Moving on to investments then. The cash balances of the council have seen a considerable increase in 2021, as I've mentioned, to an average balance now of 350-400 million, as COVID grant money has come in and yet to be expended. And there's a huge uncertainty of how and when this cash flow will be used. To accommodate this extra cash, the maximum limits for individual counterparties on the council's lending list has been extended to include higher ranges, because that's what one of the areas we've been struggling with extra cash is the limits on each one, on each counterparty. So if this is shown in Annex F on page 93, that there's been sort of the limits have been proposed for different ranges of cash level to be able to manage that more effectively. But there's no change to maturity limits at all. This is just to sort of manage the different cash levels we have. So you can see the new limits proposed on the current level of cash that we've got on Annex G on page 97, and these will be effective from the 1st of April going forward. It's also worth noting that the council also pools the cash of the pension fund with its surplus cash for investment, and this can include day-to-day pension fund cash, which the average balance is around 10-15 million, but it can also include strategic asset allocation cash, and that's we're about to expect 50 million of that to pool with the council's cash in March. So it can include both, and also that will lead to increased cash levels as well. The council's risk appetite for treasury investments remain low. Its priority has always been security first, liquidity and then yield. But given the low interest rate environment forecast for years to come, as I said, we're going to undertake a review of enhanced money market funds and short duration bond funds in the year. These funds offer slightly higher yields than our existing money market funds, which are just purely held for liquidity. But they have different risk parameters and access restrictions. So we're going to be looking at those to see if there's any appropriate ones we can set up. But approval will be sought from the Executive Council for Resources prior to opening any new funds or changing the risk profile of the treasury investments. And I guess this will come back to the board as well. Look at. So that's what we're going to be undertaking in 2021 too. And as I say, lending to other councils will continue because they are likely to offer the greatest value in 21-22, given the low interest rate environment we have. But you know, the credit risk is not seen to be a problem on this. And as Mark mentioned previously, we are going to look at a local analytics tool to look at the balance sheet structure and the potential indicators of other councils. So this will aid a decision, avoiding reputational risk, hopefully. It's not a tool to rank councils in any way, but it'll just provide more information to base future lending decisions, with other councils as we go along. So, given the factors I've highlighted and gone through there in this report, that the borrowing and interest and investment strategies for 21-22 are highlighted in the green sections of the report in paragraphs 2.3.6 and 2.4.6 on page 64 and 68 of the appendix. there are, in fact, no significant changes to these strategies from the previous year. Still going to adopt the same strategy for both. So finally, it's not part of the report, but I just wanted to mention some upcoming consultations issued by CIPFA on the Treasury Management Code and the Prudential Code that were issued a couple of weeks ago. The response to these consultations are required by the 12th of April. These codes are what govern treasury management, really, and borrowing in particular, and they were last revised in 2017. So CIPFA are looking to strengthen the codes to ensure they cover the increasing profile of the treasury management role as a result of the pandemic and the increasing complexity of the transactions in the sector, especially in the commercial investment area. So new proposals include introducing extra prudential indicators to assure affordability and proportionality of commercial investments. Strengthening the capital strategy includes these such investments, introducing liability benchmarks to link debt management to capital investment, and also to introduce a knowledge and skills framework for all those included in treasury management, both officers and members, which will involve formalising a training schedule to ensure key knowledge and skills are gained and maintained. We welcome these proposals, really, as most of what they propose we're already doing in the form of voluntary prudential indicators already and training for officers and members already. But I just wanted to mention that as it will affect 21-22 and any approved new codes will come into force for 21-22 when later on in the year, when prudential indicators are set again for the following years. So that's all I want to say, Mr. Chairman. I'll just invite Chris Scott, if I may, to just comment on that strategy from a third party point of view, if I may. So thank you.
Thank you, Karen. Over to you, Chris.
Thank you. Good morning, everybody. So yes, just some overall comments, really. So I mean, obviously it's been a challenging year just gone, and obviously the one coming ahead will be similar as well. So I think from an overall point of view, you know, what's been set out in the strategy is appropriate to help sort of manage the treasury management function for the year ahead. So sort of the key things I really wanted to pick out were, you know, there's reference to a slight increase in the level of internal borrowing. So that's the use of cash in lieu of borrowing externally. Obviously, it's been a policy that the council's followed for a number of years.
We're having problems hearing you.
In the cut-off.
Sorry to interrupt. Having difficulty in hearing you.
Okay, I've turned my camera off, so hopefully that will help.
Thank you.
So I'll start again. So in terms of internal borrowing, there's a proposal to increase that a little. So internal borrowing is the use of cash in lieu of borrowing externally. Obviously, that's cost effective, and it's a policy the council's followed for a number of years. But in the current interest rate environment, it makes sense to maximise that a little bit further because it's effective from a budget point of view. So it makes a huge amount of sense to increase that slightly. There's been reference to a change in the interest rate forecast. I mean, that doesn't change the short-term interest rate view, but our, you know, immediate outlook for long-term rates is one where they've moved higher. And Karen's explained the reasons for those. We do expect, you know, volatility during the year where rates will move up and down. So any long-term borrowing will be taken, you know, what we deem to be the right time. But, you know, that isn't right at this minute. But, you know, just really to emphasise that the internal borrowing level is appropriate. That in turn will help reduce the amount of surplus cash that the authority has, and obviously reduces the risks from a counterparty point of view as well. So again, that makes sense. To help with the management of the cash on a day-to-day basis, which is generally running at higher levels, it makes sense to increase the monetary limits on an individual basis per counterparty to assist with managing that. It also makes sense to look at other options as well. So there's obviously been reference to, a lot of money being left in liquidity, and the reasons for that have been explained. There's also been an explanation of, the wider use of the local authority sector, which makes sense. So it's a good use there. But, it also makes sense to use and examine other options to assist. So, the potential use of ultra short dated bond funds, and that type of thing will be examined, and it makes sense to incorporate that within the strategy. Just wanted to pick up also, going back to interest rates, to talk about negative interest rates. As Karen's explained, we don't expect, on balance of probability, that we'll get into that situation. And it's also interesting to note that quite a number of the UK banks have systems wouldn't currently cope with negative interest rates, and have actually been asked to look into that. So another reason why it would be delayed, but we only see that situation arising if we get, some significant setbacks on, the vaccination programme, and obviously the steps that have been set out earlier in the week. So they really only look to use that as a tool if we had a significant setback and the economy was locked down again, and further stimulus was needed. So it's something we need to keep an eye on. But we don't think it's likely to happen from a balance of probability point of view. So I think overall, the strategy that's been set out and the small changes that have been proposed makes sense, and will make the situation a lot easier to manage over the coming year. Karen's also mentioned the consultation process for the Treasury Management and Prudential Codes, and what's set out there. So local authorities are invited to comment on that by the 12th of April. Link have assisted that process, so we've sent out a couple of technical releases in the last day, which have been sent to our clients to help formulate that response. So again, we'll be helping on that front. But in terms of training, which has been alluded to, obviously we're happy to provide training as and when required. We've done it in the past, and obviously we'll be happy to provide that to you in the future on whatever basis is best required. I mean, as we sit here today, it's more likely to be on a virtual basis, but we've been providing a lot of webinars and other training events to officers and members, and they've all worked pretty well. So if there's a requirement to undertake training, in the next 6-12 months, then it's probably going to be provided virtually rather than face to face, but we're flexible either way. It's also reference to looking at MRPs, so we'll be hopefully doing a review of that in the coming months with a view to identifying benefits from the council from adopting perhaps different approaches, but whilst adhering to the guidance that's set out that you need to adhere to. So, so just really overall, good performance in Q3, and looking forward, the TM strategy that's proposed to be adopted would appear to cover all bases and allow you the flexibility you need. That was it from me.
Lovely, lovely. Thank you for that, Chris. So, members, we've got a recommendation in front of us to approve the Treasury Management Statement for 21-22. Any questions, any points anybody wants to raise that we could put to Councillor Hill? Anybody want to say anything about anything that's been said by either Karen or Chris? We got any...
Chairman, just a very brief question. It's a very interesting report. I mean, it's a great deal to take on board. I'm particularly interested in the concept of the negative equity, and I was interested in the section somewhere in the report. Forgive me, I can't remember the page, where Karen talked about the fact that there's so much money sloshing around in the economy at the moment. The money that's been put in because of COVID, that is pushing towards a zero or negative equity, and I don't quite understand. Is that just a case of oversupply? I don't quite understand that concept, and I'd appreciate a short explanation, please.
Thank you. Okay, Karen.
No, it really just means how the market's looking at investments at the moment, and for any short-term investments that we use for liquidity, such as money market funds and notice accounts. The yields on those are really low because they're based on the current base rate level, which is 0.1. The money market funds, 3 out of 5 of our money market funds are now yielding a 0% return, and I think really that a lot of them have negated their fees to achieve that 0. And if they hadn't have done that, they would have been charging a negative amount. And that's really because all the return that they're making, like the council's making, is dropping off. In terms of those funds. And when I allude to sort of benchmark rates being negative already, that's the market rates again. LIBOR, the graph that on the appendix that was provided that showed the interest rate, show the short-term interest rate, show that 3-month LIBOR, 7-day LIBOR, that they've all sort of practically gone to 0. Where you take a spread of that's what people are offering in the market, and there's usually a spread of what people bid for, what they want to sort of pay lower. So the LIBOR bid on the back of that is actually negative now because LIBOR is practically 0. So, but they're just market rates, and it's just reflecting how the short-term aspect of the yields are really low, and now a low interest rate environment. So we can't expect any significant return from liquids, assets kept liquid. I don't know if that answers your question.
Yes, it does indeed. Thank you.
Chairman, Councillor Mark Whittington speak.
Sure, Mark.
Yeah, thanks, Mr. Chairman. I've got nothing to add on Karen's excellent report and presentation, which I thought was really good. The only thing I just would like to draw your attention to, Mr. Chairman, is on, I believe it's on the revised Appendix 1 that was sent out to members, the item on top of page 4, which refers to Treasury Management training. And one of the recommendations that's coming out around governance is that our Section 151 Officer Andrew Crookham it wants to make a training for elected members of this committee on Treasury management responsibilities, in the same way as if you sit on a district council, you have to undergo training to sit on the planning committee, and if you sit on the audit committee here and the pensions committee, you have to undergo training. So I just would like, Mr. Chair, if you can encourage all members of the OSMB that when this Treasury management training is made available, that all members of the committee undertake the training. Thanks, Mr. Chairman.
Sure, thank you for that, Mark. Yeah, it's there, isn't it? As you said, top of page 4, Section 1.5 Officer Andrew. I wondered if between yourself, Andrew, and Nigel, in terms of the induction programme, have been talking about this, simply because it's likely to be more relevant post the May elections. So I'm sure that, is this a feature Nigel, of the induction programme in at a simple level, but also treasury management specifically for the new members of the OSMB?
Yes, Chairman, it's already in the draft programme of induction, which we will be taking to group leaders for comment next week. So it's already been taken care of, but we will be obviously discussing with members following the discussions at the Council Development Group. We've put that together and we're going to take that to group leaders on Tuesday of next week.
Sure. Great, because we need more than just the members of OSMB so that we can have replacements. Yeah.
Oh, yes. Yeah, definitely.
And anything you want to add, Andrew?
No, thank you, Chair. Nigel covered it very well. Thanks.
Okay.
Chairman, I've got one further speaker, Councillor Oxby.
Okay, Ron, over to you.
Well, thank you very much, Chairman. A couple of things. Obviously, I've only picked these papers up a day or two ago, so I've had trouble getting through them all. But one acronym I couldn't work out was the LOBO. I presume that's Local Authority something. If you could answer that one, just for my peace of mind.
Yes, that actually stands for lender's option, borrower's option on a particular type of debt that's available, and it just means that on certain debt, lenders offer they have the right to alter the interest rate that you're paying on that debt. And then the borrower, which we are, have the right to say yes or no to that. And if we say no, we repay the debt. So it's just a particular type of debt that we've got available. But it gives you a bit of flexibility in the maturity profile, taking that sort of debt. So that's what that means.
Oh, brilliant. So for argument's sake, if somebody had a debt for a year and wanted to extend it for another year, you could say, well, hang on, you're going to have to pay a bit more interest or whatever. Is that sort of option?
If the lender wants to alter the terms on what you've already agreed, then they have to present that to you, and then you have the option to say yes or no, you want to do that sort of thing. So it's just
that's great. Now, the other question I have, if I may, Chairman, our investments, do we specify where the money goes, or do we put it into this company to handle it for us? For argument's sake, if we thought we wanted to put it into South African gold or American oil or Alaskan whatever, is that sort of thing we do, or do we leave it to this company?
No, we don't operate fund managers. I am effectively the fund manager for the council, so I make those decisions. But we do just deal in money markets. We don't do any other type of equities or anything or commodities. So we are just talking about money in that respect. But no, we don't employ external fund managers at this point in time.
That's good. And that would apply to the pension fund as well, would it?
No, it doesn't apply to the pension fund. That's totally separate, and they do employ fund managers for all their different types of asset allocation across the board. But you're talking a total different animal there with the pension fund, and they operate under different rules and risk profile. So yes, they have a variety of fund managers that they do that for them.
That's great. Thank you very much for that, because quite ironically, I've had 3 emails today asking about where we put our pension money, so I can give them an answer. Thanks very much. Thank you, Chairman.
Thank you. Anyone else? Right.
No further speakers, Chairman.
Okay, I've got one question, which relates to a year ago, and when we were sitting here looking at our treasury management strategy for 2021, almost pre-COVID. It was the cusp, wasn't it? Okay, I think the point I'm making is in relation to we couldn't have foreseen when we were setting the strategy a year ago what the world would bring in terms of the changes, the turmoil to what we might call the economic and financial worlds. Okay, now I'm just interested in knowing how robust this strategy is in the light of, and I'm not suggesting it's not robust, but in the light of the way the world can treat Lincolnshire County Council and its treasury management strategy. So what sort of factors have been implicitly taken into account? I've read some of them, the expectation about interest rates, etc. But how, I'm not saying fireproof, but how robust, I think that's the best word I can use, robust is this, if we use the experience that we've had over the last year?
Well, I did mention that the actual borrowing strategies and the investment strategies haven't really altered from last year, if you look, and that's really because they give us a lot of flexibility in how we react to things that happen. So, for example, the borrowing, we take all borrowing with the aim of achieving certain things, but keep in mind anything that happens throughout the year. So that gives you the flexibility to react to what's happening, and that's all you can do really. And like you say, looking at the interest rate forecasts and reacting to anything that's happening, having a good set of policies, procedures in place that's allowed us to operate from home, working from home effectively straight away, for example. Look, it's really looking at all the risks inherent in the area and having a policy to manage all those different types of risks. I don't know if you've got anything to add to that, Chris. Have you that can support that? But that's what's happened over the last year. We've adapted to what's happened in the market, and yes, the interest rates have been up and down, and they've fallen off. The short term have fallen off extensively. But like I say, you just have to react, and also sort of planning on looking at alternative areas as well, with the reviews on money market funds coming up, enhanced funds and things, to look at what else is out there. But the strategies themselves give us the flexibility to adapt to that and react to what's happening globally, as it were.
Okay, an assurance and a half that we've got a strategy in place that can react to any sort of eventuality.
Mm-hmm.
Just that's the key thing, really. Just from Karen's hit the nail on the head. Really, you need a strategy that provides flexibility within it to manage your position with whatever may get thrown at you. So obviously it's been a testing year, but obviously some of the small changes and tweaks that have been proposed, obviously based on what we've learned over the last year, and obviously are designed to obviously try and make life a bit easier and give you the flexibility to manage things going forward. So that's the key. And again, importantly, it needs to be consistent with your risk appetite, because that obviously varies from authority to authority. So again, it needs to be written in that regard, which clearly it is.
Thank you. That's the level of assurances that we're looking for from both of you. Thank you. Thanks for that. So, recommendation that the leader of the council, that we're essentially saying that we're recommending that the leader of the council does approve the treasury management strategy that we've just been discussing. Could we have a vote on that, please?
Yes, happy to propose, Chairman.
Thank you. And a seconder?
Seconder, Councillor Brockway.
Okay, Nick, do we need to vote on this by record or by
Yes, I'll do a roll call, Chairman. So, Councillor Mrs. Brockway.
For.
Councillor Kendrick.
For.
Councillor Macy.
For.
Councillor Marfleet.
For.
Councillor Mrs. Newton. Councillor Mrs. Newton. Councillor Oxby.
Oh, sorry, four. Sorry.
Okay, thank you.
Four.
Councillor Oxby.
For.
Councillor Parker.
For.
Councillor Pepper.
For.
Councillor Rowe.
For.
Councillor Strangle.
For.
Councillor Wotton.
For.
That's unanimous, Chairman.
That's fine. Thank you very much. And thank you, Karen. for a great report, and thank you, Chris, for your contribution as well. Thanks, much appreciated. If we could move to item 9 now, please. This is performance reporting against the corporate plan for Q3, pre-decision scrutiny prior to going to the executive on the 2nd of March. Jasmine Sodhi, Performance and Equalities Manager, is presenting the report. Jasmine. Okay, Jasmine, we can't hear you at the moment. I think you need to unmute. Hiya, Jasmine, you're on live. Do you want to unmute? Jasmine, I'm sorry, but we can't hear you at the moment.
I think she's. Sorry, Councillor Parker. I think she's struggling to get her mute button off, off on the keyboard. I think she's frantically trying. Yeah, she's managed it now, I think. Fine,
thank you for the presentation, Debbie. Appreciate it.
You've gone back. You've pressed it back on, Jasmine.
We've been in and out. It's like an involuntary thing. It's going in and out. Can you hear me now?
Yes.
Okay, apologies for that. It was showing it wasn't muted on my screen, and then it seemed to froze. So, okay, thanks for bearing with me. So, yeah, so this is the Q3 performance report. So this relates to performance for the period October to December 2020. And this report will be presented to the executive on Tuesday, the 2nd of March. And then the views of OSMB will be reported to the executive as part of their consideration of the report. So just as well as the corporate plan performance that's presented in the report, we've also included service level performance that specifically comes within the remit of OSMB. So reporting is around performance indicators, those key performance indicators and activities that relate to the corporate performance framework, specifically around the corporate plan, and the reports organised around those 4 ambitions in the corporate plan. So all of the performance for Q3 is also published on the Council's website, although this report focuses on reporting by exception. So again, in terms of the service level performance, that's reported to the individual scrutiny committees, and all of that is also available on the website. So I think I'll just move to the executive report, which begins on page 103. And section 1.3 on page 104 just summarises the overall achievement in terms of Q3 against the corporate plan. So around 4 of those ambitions in the corporate plan, all 4 are on plan. And this assessment's been based on performance against the key performance indicators and those key activities that I've mentioned. So again, in terms of headlines of performance around those key activities, we've got 34 activities where milestones are due in Q3. And of those, 65% were either on plan or ahead of plan. So 20 of those were on plan, 2 were ahead of plan, and 12 were behind plan. So I think generally it's just worth mentioning here that in Q2, when we presented performance, that was performance relating to July and September. That didn't reflect the second national lockdown. However, in Q3, as Lincolnshire was in Tier 4 during Q3, and that's preceding the third national lockdown, that's quite evident now in the performance, and it's been highlighted in the report. So in terms of those activities, nearly 60% of those that are behind plan have been impacted by COVID-19 and the pandemic in some way or other. So all of the details of those are included in Appendix A, which is in page 117. And just taking on some of the comments from OSMB when we presented Q2, I've also included the next milestone, so you can see the big picture in terms of what's the ambition, what's the objective, so what is it that we're ultimately trying to do, what was the activity, what were we going to do in Q3, and what we were going to do next. But I think what I'll do now is just begin by looking at the report on page 105 and just summarising some of those things, some of those activities that are impacted by COVID-19. So, for example, numbers of adults with a disability who are in meaningful employment or volunteering, that's been impacted. Again, as mentioned in the previous report, there's been impact on the economy, and also the targeted work that the service would have done has had to stop. So again, that's been an impact. In terms of publishing homes for independence strategy and delivery plan, and that milestone's behind plan, and that's around lack of availability of staff across all partners due to COVID-19. In terms of team around the adult initiative, that pilot was due to commence on the 1st of December. Although recruitment has started to take place in terms of staff to move that initiative forward, we didn't meet the milestone, and actually that pilot will is expected to start this month. In terms of work that we've been doing with the LGA and also the Health and Wellbeing Board to review those priorities, that was due to take place by the end of December, but there's been a delay, again due to capacity, due to COVID-19, but also delays in government guidance not coming out until November. In terms of the Visit Lincolnshire website, although the content and the website's been created, due to the current lockdown, it wouldn't be appropriate really to have that, to get that the most impact of launching that in the current climate. So that's been delayed until the 1st of April. In terms of the Sherman initiative, we spoke quite a bit about that when I presented Q2 performance. So this is where fire and rescue staff go into people's homes to conduct a safe and well check for those people that are particularly vulnerable in terms of fire and its consequences. So again, although the breadth of work's not taken place that would have done pre-pandemic, colleagues in fire and rescue are taking those opportunities to undertake those safe and well checks when they enter someone's home for other sort of legitimate reasons. In terms of the go live date for the Business World system, again, as we reported in Q2, there's been delays, and that will now start in November 2021. So the early parts of that were due to the pandemic, but also beyond that, it's been impacted in terms of the complexity of the way that the existing system was configured. So that's caused some additional delays and additional build requirements. So what I've also done, section 1.4.7, is highlight those activities that are ahead of plan, just to give you a bit of a flavour of where we are with those. So again, in terms of children that are eligible, those children aged 2, 3 and 4, eligible for early years entitlement provision, work's been done to progress that in terms of financial sort of briefings and sufficiency of assessments. In terms of the annual report for the One Public Estate, that will be completed ahead of schedule. So that will be completed in the middle of March, and it was due to be completed in April. So those two activities were actually ahead of plan, those two that I mentioned earlier. So in terms of those activities that are on plan, work's continued. So I think this gives a flavour of the work that's still continued despite the pandemic in terms of a joint LCC and LEP submission to inform the comprehensive spending review. Works continued in terms of creating accommodation options for greater independence and well-being, and this is around extra care housing and influencing developers in homes that are built that actually meet the changing needs of the population. So baseline accommodation needs analysis has been completed. In terms of the adoption service, so that was launched with regional partners, so 5 other authorities in the region. So that's a really good piece of collaborative work, and that activity has now been completed. And again, in terms of children's centres, developing that sort of virtual provision, that continues. Again, reported this in Q2. That virtual provision continues, as well as wellbeing walks for new parents, and that is again within the government guidelines, and that particularly supports maternal mental health. And both of those have been taken, had good take up and continued support from the families that they're aimed at. And then also in terms of promoting mental well-being amongst young people to increase their resilience. So work has continued in terms of implementing that mental health in schools pilot, and education mental health practitioners are being recruited and beginning with their training, are well on their way with their training for that. and again work on Fix My Street. So they've been reviewing the feedback from that and the responses that have been coming through. And then the next phase is to promote Fix My Street in all relevant sort of communication channels. And then section 1.4.9, I've just highlighted in a visual way where we are around each of those ambitions and those objectives, whether it's ahead of plan, on plan or behind plan, and the impacts of COVID-19 on those. And then moving on in terms of the performance indicators, which is the other element of the corporate plan. So this is on section 1.4.10, page 110. So we've got 11 performance indicators, those key performance indicators reported in quarter 3. Of 7 of those can be compared with the target, and actually 86% of those have met or exceeded the target. So that's higher than the level that we reported in quarter 2. So we've got 6 of those that have exceeded or achieved the target out of 7. So just some highlights around that. We've got 91% of visitors through TripAdvisor that visited heritage sites that are saying that they had an excellent or very good experience. We've got 94.5% of our super fast broadband coverage in Lincolnshire now. That's ahead of the target or within target range. Again, adults with learning disabilities who live in their own home, we continue to achieve that target. And children living in a family environment, children in care living in a family environment, again, that continues to exceed the target. As you may expect, the number of online transactions for click and tip bookings continues to be high. We reported this in quarter 2 also. So that's a majority of those transactions, over 131,000 of those transactions relate to that. And then we've got nearly 13,000 other transactions. So as you might expect, there was a seasonal reduction in garden waste being taken to the tips, but actually there's been an increase in other transactions relating to COVID-19, including safeguarding referrals and unfortunately deaths reported to the coroner as well. So in terms of those contacts, or our aim is to, where customers contact us, is to resolve those concerns at the early stages before it goes to formal complaints. So 48% of those were resolved in those early stages, and that's within the context of a vastly increased number of contacts to the authority as well. So actually that's a considerable achievement given the volumes and the impacts of COVID-19 and some of those relating to some of those contacts. And also I think some good news in terms of jobs created and safeguarded. We've had 464 jobs safeguarded and created, significantly ahead of the target that we accepted. So that's some expected, so the target that we set. So that's some really good news as well in the midst of the sort of pandemic and the effects on the economy. So that's my sort of summary. I'm happy to take any questions or any comments.
I think to start off with, I'm fair to say it's been a seriously challenging quarter. The period from September, the end of September, October through October, November, December, when we were in Tier 4, did present challenges to the local authority, and it's good to see so many of the targets have still managed to be attained despite the problems. Okay, that's just to recognise the work that's gone on throughout the County Council. So, Ray, have we got some speakers?
Yes, I'd like to ask a question first, Chairman. Jasmine, you mentioned Fix My Street, and my ears pricked up then. A common complaint that I receive as a councillor, particularly from parish councils, is that they report complaints or repairs to be carried out on the website, but then get back job completed when it has been done.
Okay. I'll take that to the service and I'll feed that back and see what response we can get.
Okay, thank you. Chairman, I've got Councillor Rob Kendrick next.
Yeah, just before Rob, I'd support exactly what Councillor just said. It seems as though that the matter is dealt with almost instantaneously from report. So that's 2 of us. Rob,
yeah, thank you. I'll take that back.
Thank you, Chairman. I was particularly interested to see mental health wellbeing project in schools mentioned. I think this is such an important thing as we come out of COVID. we're all aware of the impact of COVID has had on young people. I think that's very important. And I would be interested in some information outside of this meeting. On page 117, there's reference to an employment and volunteer project group being, I think, re-established last month. I'd be very interested in learning more about that, but obviously that's for outside this meeting.
Yeah, that's fine. I'll follow that up. We'll come back
Thank
to
you,
you.
Chairman.
Thank you. Right.
Chairman, I've got two speakers, Councillor Hugo Marfleet and Councillor Stephen Rowe.
Thank you. Hugo and then Stephen. Right. Okay, Hugo first.
Morning, Chairman. Morning, all. Yeah, it's just really to support Councillor Wotton's thing about highways and the Fix My Street. But if you're going to take it up, Yasmin, can you just really take up the whole communication reference to highways? Because all my parish councils moan about how shocking it is. They never get replies. And it drags me always in chasing it up, and it's always difficult to get replies. And actually, you know, it's sort of, I know it's highways, but it's the one area that impacts on everybody. And it's the one area that the sort of, we never know really. I know we get this sort of umpteen, this email which says everything that's going on, but you never really know where you are, where anything's planned, what's really going on at times. And I think, and I get the frustration of a parish council because I get frustrated with it. So, you know, and it is absolutely right. You send to Fix My Street. What it's actually saying is, yes, it's been noted. But what it actually says is it's been done. Actually, what's been done is it's been logged onto the LCC system. That's actually where it goes wrong. But it is somewhere, it's something that we do need to get a better communication system going for parish councils. Otherwise, it just, as I say, it just becomes repetition all the way through the system, chase. And every parish council meeting I go to, it's chase, because no one knows whether it's being done or not being done. And I think if we could get a better system all the way through, it'd be a lot better. Sorry for opening.
Thank you.
I take it on behalf of the rest of the committee that the 3 points that have been made so far by the Vice Chair, by Hugo and myself are enough. And can we move on from that issue? Is that okay? Fine. And
Debbie wants to come in.
It's really just to say that really helpful to get that level of feedback, and I'll personally take that back and ask for a fundamental review of it all. So thank you very much.
Thank you,
Debbie.
Thanks.
Chairman, I've got Councillor Stephen Rowe and Councillor Eddie Stringle.
Excellent. Steve.
Oh, thank you, Chairman. I'm afraid it's about Fix My Street.
It's got to be quick. It really has.
It's better than the message that's come out so far. The early days of Fix My Street, that there was an awful lot of recognition of work being noted to be done, and that showing as done. But that has improved over the last few months. It is important that people register on Fix My Street, because if you don't register, you're not going to get the feedback. So you need to register, you need to put your email address forward, and you will get updates. Not perfect yet. I still occasionally get something that's supposedly being done and hasn't, but that's probably changed from 30% to 5% going that way. I'm also finding that prior to the big freeze and wet, I was getting things reported on Fix My Street and repaired within 7 days. And in one case, it was actually repaired within 3 days. I went and checked because, like some of the other councillors, I suspected it might not have been the case, but repairs have actually been done. So Fix My Street is moving on. I use it a lot. I'm finding it's improving. There's still room for more improvement, but I know that is happening, obviously from the highway side. Hope that's quick enough.
Okay, that's fine. The end of Fix My Street.
Sorry, no.
Not more. Please.
I'm sorry, I'm going to say in support of Fix My Street because 2 weeks ago I reported on Birchwood Avenue. I got an initial acknowledgement straight away. 2 days later, I got another acknowledgement saying work in progress. 3 days after that, completed. So it's not all bad news. I think it does work. It may not work in certain areas, maybe a bit more of a problem in the rural area. I don't know. But I'm in support of Fix My Street. So I'll say no more now. Thank you, Chairman.
Okay. Next speaker, Ray. Who's down to speak next?
No more speakers at the moment, Chairman.
Okay. I just wanted to ask something in relation. Sorry, Jasmine. In relation to this question, where have my cross? Right. The point about page 106 and 1.46.4 ambition, good value services. It's to do with the question of the solution design and build in relation to the way that we're handling the go live for Business World. I know that Business World is that the issue has been reported to us over time, but the problem seems to be about the existing system complications. And I just wondered if you could tell us any more, because one of the fundamental transformations of the County Council going forward is going to be around the Business World system. And I can't help but feel that the delay from April to November is a long period of time. And I know, but I accept the point about we're living through a COVID world, but that system complication does need some explanation. And I know we've had Andrew McLean talking about it previously, but I just want to get across a message that perhaps James can help us with, to explain to the executive from an overview and scrutiny management point of view, why and what can we do in order to improve it. So I don't know if you want to start, Jasmine, and maybe James, but
I think James is poised to respond, so I'll pass over to James. Thank you.
Thank you, Chair. Yes, there are a range of reasons relating to the delay and the live date that's moved back from April to November. When we say COVID, we don't necessarily mean directly COVID itself, but it has had an implication on workloads of some people that we need to be involved and sickness levels and things like that, and also around how we can test the new system effectively in a virtual environment, which has proved more challenging than we would have originally thought pre-COVID. In addition to that, there are system implications with the quality of some of the data that we currently have on the system at the moment. And what we are doing is rectifying that and making sure that's now correct, but then also ensuring that with the new system and the new policies and procedures that go with that system, that we ensure there's compliance so that the process itself is straightforward, and then officers implementing those processes are then, and actually acting on those, are compliant with them. So there will be safeguards in the system that will check that, and we'll do training, etc., so that we'll ensure we don't get back into a position where we've got any issues with the data. So it's a combination of reasons. When we then knew it couldn't go live in April, we then had to look around other workloads and key dates for a range of staff, including production of accounts and things like that. And that's why we've gone for a November live date. But it's, as I say, multiple reasons why. The data is part of that reason, but certainly not the only reason.
Okay. Yeah, right. Anyone else want to bring anything forward? Okay, so just looking back to the front page, what we're invited to do is consider the report. We've done that. Determine whether the board supports the recommendation of the executive as set out in the report. Any additional comments? We've had a few, two in particular that stand out. Clearly, Fix My Street. And also the issue about the delay in going live with Business World. When we review and comment on the performance information that's within the remit of our board, I think we need to highlight, how well we've done in difficult circumstances. That so many of the KPIs have been achieved in these difficult circumstances, I think is worthy of note and we ought to bring that to the attention of the executive. Okay, so if that's the case, do we need again to have a roll call on this?
Yeah, happy to propose, Chairman.
Thank you. So that's the mover. A seconder?
Yeah, I'll second. Councillor Brockway. Yeah.
Thank you, Jackie. Nick?
Thank you, Chairman. Councillor Mrs Brockway.
4.
Councillor Kendrick.
4.
Councillor Macy.
4.
Councillor Marfleet.
4.
Thank you. Councillor Mrs Newton.
4.
Councillor Oxby.
4.
Councillor Parker.
4.
Councillor Pepper.
4.
Councillor Rowe.
4.
Councillor Strangle.
4.
Councillor Ray Wootton.
4.
That's unanimous, Chairman.
Thank you. And thank you, Jasmine.
Thank you. Thank you, everyone. Bye.
Thank you. Okay. Moving on to item 10, COVID-19 update. We've got an update since we had our report back in January. It was sent out, so everybody should have had it on Tuesday. Okay. Can I invite Michelle Andrews to present the report? Michelle.
Thank you, Councillor Parker. Starting the presentation and outline that we submitted the paper to be distributed on Monday, which obviously wasn't able to then reflect the most recent announcements by the Prime Minister on Monday late afternoon and into the evening. And so that will be fully explored in our next paper, but I will give you a verbal outline of that just to reflect that today. But I'll start with the paper first. And the good news regarding really the position of our data. As agreed at the last meeting, I've started the paper with a comparison of the data at this month. The latest data is the position of the 22nd of February, which is the most recent we're able to have prior to the submission of the report, in comparison to the data delivered in the last report in January. So I've outlined the key parts there with regard to the rate of the positive cases per 100,000. And as you can see, it was reported last in January that it was 209.7 per 100,000. And we now stand, as of the 21st of February, we stand at 111.9 per 100,000, and that's our average across Lincolnshire. And the latest update and breakdown for each of the districts is obviously below. And with regard to then looking at the Lincolnshire reported cases in the last 7 days, as you can see, last month it was 1,596, with a comparison to the 21st of February, which is 852, which is obviously significantly different and going in the very much the right direction. And then we've also got the latest death reports, which were reported as 66 in January at the meeting, and that now, as of the 21st of February, is sadly still 36, but obviously that is a much better position than we were in previously. And then outlined the number of vaccines that had taken place. As reported in January, we were then at just under 50,000, and we are now, as of the 14th of February, we were just over 200,000 vaccines administered, and that obviously has been updated since then, but that's the latest figure that we're able to include in the report. So then we've outlined the data as it stands for the record, and happy to answer any particular questions on that. But what we've also then outlined for the group is to the current activities that has taken place since January. As I said, this is a very fast-paced agenda. And so it is important to recognise the changes that have taken place since we last reported. So the new variants that have been recently identified have become a cause for concern and have ensured the government have reflected on our international travel arrangements and set out in the report the red list countries and people returning from those are now required to quarantine in agreed hotels. However, for Lincolnshire, that doesn't impact on Lincolnshire as we don't have any major airports in the county, and the closest airport with these restrictions in place is Birmingham, and that's been confirmed by the Ministry of Housing, Communities and Local Government. So we set that out for the committee. And in addition to that, there have been additions to the clinically extremely vulnerable cohort, and this is based on a range of measures that have been put together to identify throughout the experience of the pandemic cohorts of people that may be more vulnerable to significant disease from the COVID pandemic if they were to be tested positive. And so what the government have decided to do is revisit that. It is quite a complicated process to identify. There's a number of measures that include where you live, the areas of deprivation, the weight, health, and various other measures that then add up to if you've been identified as this group. And those groups now should have received an additional letter advising them to, where possible, shield, and that also then enables those particular people to be pressed forward for a vaccine at an earlier opportunity as part of the cohort that have been released by the Joint Vaccination and Immunisation Committee. So I've also set out in the report the information around the community testing programme that has been extended since January, and also set out our current plans for Lincolnshire with regard to our recovery planning. Now, obviously, since this report was written, the government have released their roadmap, and I will reflect upon that. And it does very much marry in with the proposals that we have set out for our local arrangements. So I've also set out in the report the approach that was proposed for 2020 when we entered into from our response to recovery phase. And I've also explained that why we aren't necessarily going back to that particular approach, and that we've revised our approach, reflecting on the changes that have happened since 2020 and the need to really look forward to, as the government described it, an irreversible position, in the hope that we don't need to, once we go into recovery, we don't then need to go back into a response position. So locally, we're going to set this out in 3 phases, and we're looking at the planning and preparation phase now, which is in progress, to look at how we ensure we are recovery ready when the time is right. We then will be moving into a mobilisation and coordination phase, which is very much the medium position. And this will allow the multi-agency response to be put in place to allow all partners to work together as relevant to the recovery process to ensure the well-coordinated mobilisation period. And then finally, we'll move to a position of oversight and assurance. And as the lead organisation for Lincolnshire County Council, will chair and have the oversight of the recovery process. However, what we want to do is all agencies work together to ensure that this is position, and as I say, this is done well and in a positive way. So how does that fit in with the plans for the current response phase? What we've done, we've set out how we might approach this locally, and what we're looking to do is have a theme-based approach to our recovery process, very much focusing on our economy and business sector, the health and well-being of our communities, and also then looking at our community and voluntary sector engagement to ensure that they are resilient and well supported during our recovery process and beyond. So what we've set out there is how we will move from response to recovery when the time is right, and the different processes that will then step down and step back from active use, and how others will step forward to make sure that we have those assurances in place. And what this will do will fit nicely with the government announcement and the roadmap that they've set out, because actually what will happen is we will run alongside that, and I'll just take you through now the key steps that the government have announced within their roadmap. So step one will begin on the 8th of March, when all schools will come back with twice weekly testing for secondary school pupils and staff. And our school clubs can restart and people can meet one other person outside. There'll be an additional element to that on the 29th of March, when the rule of 6 will return and outdoor meetings will be able to take place. However, they are then at that point still discouraging people and preventing people from meeting indoors. Step 2 will begin no earlier than the 12th of April, with the announcement at least 7 days before that we have met the requirements to move into that stage. And that will allow non-essential retail to reopen and personal care, including hairdressers, nail salons and other leisure facilities such as gyms, to reopen. It will also include pubs and restaurants to open outdoors, and zoos, theme parks and cinemas will be able to reopen, as well as libraries and community centres. Step 3 of the government's roadmap will be no earlier than the 17th of May and will allow most restrictions on meeting outdoors to be lifted, and but will have a subject limit to 30. And also you will be able to see families and friends indoors, subject to the rule of 6 or 2 households meeting. And at that point then pubs, restaurants will be reopened. Step 4 will start no earlier than the 24th of June, and that will aim to look at removing all legal limits on social contact and other weddings and other life events. And the government have obviously set out a lot more detail behind some of these things, including when large events and performances may restart. However, what we'll do is, as the guidance is being developed over the next few days, what we will do is make sure that in our next briefing to the committee, we'll outline in much more detail how that may look for Lincolnshire and how that might fit with our recovery process. So what our outline proposal is that our prep and planning stage will progress now and will continue through till 12th of April, when more wider openings will take place. Then we'll look at our mobilisation and coordination phase, seeing us through step 2 and 3 of the government's roadmap, and then looking to prepare ourselves for a recovery in and around the date of step 4, which is currently set out as the 21st of June. I hope that gives you an overview of where we currently are, and I'll do my best to answer any questions.
Really good. Thank you, Michelle. Great. Okay. Debbie, do you want to add anything to that?
Chairman, Debbie's had to leave the meeting.
Okay, fine, thank you. Okay, members, who have we got down to speak?
Nobody at the moment, Chairman.
Okay.
Chairman, Councillor Rob Kendrick.
First in line, Rob, over to you.
Thank you very much, Chairman. One question that seemed to come up at the parish councils that I attend, obviously virtually, is just recently they've been saying, when will we be able to meet in public together in the normal fashion? And obviously that would extend to other councils as well. Do we have any indication of when that might be permitted, Michelle?
Within the outline, up until the 17th of May, there will be significant restrictions on that. Following that point, there may be an opportunity for people to meet together up to a volume of 30. But again, that isn't set in stone yet. That's only the outline. So I think it will be the middle of the year before that is possible. And obviously, we will need to keep an eye on the data and if all of those measures have been achieved.
Okay, great.
I've got no more speakers, but I'd like to ask a question, Chairman. Do you remember the last time I spoke on this subject to you? I was concerned about people crossing borders from Nottingham area coming into our area, Lincolnshire, and also the East Coast. Are those infections still high from neighbouring counties and also from the Skegness East Coast area?
Okay, I haven't got the data to hand, but we can share that after the meeting if that is helpful, and we can perhaps take account of that in the next report if that's something that would be useful to reflect on our position with regard to our East Midlands neighbours. East Lindsey has got a very low rate at the moment. We have recovered really well in East Lindsey for that. So again, as you say, there is concerns that as there's more movement, as restrictions ease, there will be some concerns about the spread of the infections. And I think that's why the government have made the decision not to introduce the tier system, as they felt the tier system did encourage more movement from the higher tier areas where there were greater restrictions into lower tier areas where they had more freedoms. And so this is why one of the rationale for introducing a countrywide, if you like, approach to the easing of these restrictions. All areas are my understanding, are on the right trajectory, but we will need to monitor that as the situation as restrictions ease. But I will make sure I put the reference to that in the next report for you if that's helpful.
Thank you. And certainly what concerns me is both myself and Councillor Linda Wootton have been doing lots of food deliveries for vulnerable people. And when in the first and second lockdown, the roads were deserted. But today, and we were going out this afternoon to do another delivery, the roads are like back to normal. People are still out and about. They're not really staying at home anymore.
I mean, I think that is a key message that you can help share, that actually the current stay-at-home message is still in place, and people should only be going out for those key reasons until the rules change in line with the government's roadmap. So it shouldn't be really free movement, but I do understand and accept what you're saying. There is a greater amount of traffic on the roads. However, we are monitoring that, and it is significantly still reduced in comparison to the normal period of last year. That is being monitored. So there is still a reduction in traffic flow, although I accept it isn't, we're not in the same position as we were in the initial lockdown in 2020.
Thank you. Thank you. Thank you, Chairman. I've got no further speakers at the moment, Chairman.
Okay, could I then ask a question, Michelle? And this report is great, because it tells us exactly what's been happening, just the sort of thing we want. I'm interested in going forward, though, and the County Council as an organisation internally, and the way that we deal with them, the people that look to us for services. We've got these steps in place, which will change the way that we operate currently at the moment, because we're restricted, and we will be able to do things after the 8th of March, and again after the 29th of March, and again after the 12th of April. And I'm interested in how this is going to unwind. It's going to be in a positive sense, and what system we think we're going to have in place to use OSMB as an example to monitor what's happening. We've got our last meeting in March, okay, and then there isn't one in April, there isn't one in May, and then June comes around, and maybe Nigel West could be involved in my question and answer. But I'm interested in knowing, because I'm sure that the executive may well be asked to take decisions, and I'm interested in knowing how Scrutiny will be able to operate during this transition from where we are at the moment to where we could be by the time OSMB next meet in June, and how we're going to monitor it. So I'd welcome, at least if not a response, but to note that and to talk about it, because I think it's pretty important.
Nigel, would you be able to advise on what our opportunities and options are?
Nigel's had to leave the meeting, but I'll raise with him afterwards. Yeah, we have the next OSMB meeting on the June after the March one, and then there'll be executive in July. I suppose whether there's any executive council decisions in the meantime, but I'll raise that with him and we'll look at what we can do in the meantime.
Yeah, okay. And perhaps you could talk to colleagues.
Yeah.
Well, because I think it cuts across the whole of the county council what we're doing, because we've changed our way of operating. Now we're going to gradually change back, or develop new ways of operating in the light of where we're at. And it just seems to me that there's a potential gap. But okay, thank you for that.
I'll look at that for the next paper, Councillor Parker, and see if we can put any more information and assurance about that element in the March paper.
Okay. Thanks, Michelle. So, if there's no further speakers, actions required. We've considered the report, provided feedback. Thanks. And I now propose that the board receives the report and notes the feedback provided, and that's taken into consideration for the next update in March. If anybody disagrees, can you indicate in the chat box, please? Any comments?
None recorded, Chairman.
Fine, that's agreed then. Thank you, Michelle. Appreciate it very much. If we move to item 11, Revenue Budget Monitoring Report, Q3 to the 31st of December, pre-decision scrutiny, going to the executive next Tuesday. Can I ask Michelle Grady, Assistant Director of Finance, to present the report? We've also got the supporting cast, Pam Clipson, Sue Maycock, Keith Noyland, and Mark Popperwell. Okay, over to you, Michelle.
Thank you very much, Chairman. So the board are being asked to provide comments on the Q3 Revenue Budget Monitoring Report that will go to Executive on the 2nd of March, and that starts at page 129 in your reports pack. I'm just going to try and pick out some of the key elements, and then myself and the team will look to answer any questions or take any comments that you have. So a summary table is available on page 130, and that shows the variances against each service line for our business as usual budgets. You'll see that our previous forecast total, excluding schools, was an underspend of 1.9 million, and our current forecast variance, excluding schools and capital financing, is an underspend of just over 15 million, which is an increased underspend on our service budgets of 13.4 million from the position we reported in Q2. The largest variances in terms of budget and forecast are set out in paragraphs 1.4 to 1.12 of the report. I'll just pick up some of the key changes from Q2, but it's worth noting that this is quite a significant shift from our previously reported position, which is now really reflecting the impact of the COVID-19 response and generally areas of lost activity and redirecting of resources and costs into the COVID response, and the use of the funding that's come to support that. Paragraph 1.12 does highlight that this may cause some pressures in the new year, and we'll need to keep on top of that and identify those ongoing pressures that fall out of the pandemic, and consider what provisions we might need to make in terms of the underspend being reported in Q3, and what ultimately that might come at the end of the year. But also when we come to the COVID reporting, I'll mention that we have been given some more funding into the new year to help support that as well. In terms of key movements, adult care and community wellbeing are reporting an underspend of 7.6 million, which is quite a shift from their Q2 position. That's mainly due to things like sustainability payments that have been being paid to our care providers, being met from COVID grants rather than core budgets, and quite a lot of work being redirected, particularly around the public health teams, into the COVID response, and those costs being met primarily by the contained outbreak management funding. In children's services, they have reported a movement of 3.4 million from their position in Q2, so they've moved from an overspend position to an underspend position. Previously reported overspends are still in the system, but they're now being offset by additional grants being available to fund some core activity diverted to the COVID response, and some under delivery of commissioned services, which are all highlighted in the report. The other area of key change is an increased underspend on other budgets of 1.8 million relating to the corporate contingency and other pay contingencies. We're still expecting an underspend on capital financing, but that hasn't been reported in the overall total, as we expect that will transfer to reserve to support the future capital programme. In terms of the financial impact of COVID, the key issues are highlighted at the front of the report on page 132, and each service directorate has included a separate section detailing the impacts specifically of COVID-19 for their services. This is summarised on Appendix K, which is on page 172 of your report. So the actual expenditure and losses we're reporting to the 31st of January are just under 37 million, and the forecast expenditure and losses for the year is currently at just over 50 million. The forecast overspend against our general COVID grant at the moment is about 2.2 million, but that does include some contingency items. So we would hope that all of our costs should be met by the COVID grant, the general COVID grant, but as we're forecasting at the moment, that is slightly overspent. We've received 44 million of the general emergency COVID grant from the government and additional funding to support losses of income. And it's also noted that that general funding will carry on into the new year. So we've been notified, and that was part of the budget papers that went to council on Friday, that we will get £15 million of general grant to support COVID costs as they go into the new financial year, and also receive some support for areas like council tax and business rates losses and income losses as well. So that was all part of the budget report, and that funding will continue into the new year. As well as the general COVID grant, we've received quite a number of specific grants that have been given to us for very specific purposes. And in total, we're expecting that will probably be in the region of £100 million for this year. Kind of highlights the issues that Karen's been talking about in terms of cash management. Some of those grants are coming in and effectively going straight back out. So some are for our care providers, and we're passporting that through for things like infection control and testing, but also receiving money for things like supporting the clinically extremely vulnerable group, the winter support for children and families, and some specific care sector ones for workforce support and care home testing. You'll see in the report that we've also highlighted some of the savings that we're making on our core budgets that relate to underactivity in relation to COVID. And that's in paragraph 1.22 of the report. And we've noted that we've got savings that are specifically related to COVID in things like contracts and travel and stuff of £5.6 million. So I will hand over to the board for any questions or comments on the report. Thank you.
That's really good. Okay, right.
None reported so far.
Okay. Can I ask a question about COVID money in and out? Because I got the impression, well, I think he said, that the COVID fund was overspent. Okay. At the top of page 116, there's a paragraph that talks about that during the first quarter of 21-2, related costs are expected to be, okay, that's starting the new year. How much will the extra funding, which is more than, okay, the surplus is greater than the expenditure, how has that come about relative to the previous year, when we're now saying that we're going to be overspent? Has the government started funding us for more things than we're doing, whereas in the past they were funding us for less things than we're doing?
Sorry, I didn't catch the beginning of that, Councillor Parker. Which part of the report are you referring to?
116.
Paragraph 116. Sorry, yeah. Okay.
Yeah. So the forecast at the end of this year is that we will have overspent on COVID. Let's call it that big box. Okay. This year, going into 21-22, the expectation is that we're going to be funded for a greater level, reading there, because it talks about the first quarter COVID-related grants are estimated to be 10.8 million plus 1085, and we're being given 15 million. What I'm saying, has there been a change in sort of attitude of the government? Because if we were overspending relative to the income last year, this year, that next year we're going to be getting more money than we're forecasting that we need to spend.
No, I think that's just probably a reflection that we need to really consider what our costs are going to be going into the new year. So we've already forecast that we've got an estimated cost of 10 million. In terms of the government funding, the initial tranches of government funding that were issued were based on adult social care relative need figures, and we did quite well out of that. But obviously it put some councils at a disadvantage, so the district councils didn't get very much out of that first tranche of money. That was adjusted in the second tranche, but over that time the government has created a COVID relative needs formula, which effectively is a mixture of deprivation and social care measures. So they are issuing their money based on that COVID relative needs formula. So it's still the same formula that they've used for the tranche one of the next year's money. And obviously through this year, they've kept issuing tranches based on the ongoing lockdown situation. They've issued that first grant of first portion of money. We've currently done some estimates at what we think the cost might be going forward, but we'll need to keep refining that based on what the position is and what the costs are that continue to come through. So I don't think it's that they're funding us any differently. I think they're funding us at the same rate. It's just the cost that we've already identified, but clearly that's a continual process.
Okay, right, thanks. Any more?
No, not at this moment, Chairman.
Okay, if that's the case, just one final opportunity, because we need to pass on some of our comments to the executive. At the moment, we've got some. Right. The paper that we've got actually says consider the attached report and determine whether the board supports the recommendations to the executive set out in the report, plus any additional comments to be passed on. If there's no further comments, then Nick, over to you.
Chair, just need a proposer and a seconder.
Okay, proposer, seconder.
Happy to second. Happy to second, Chairman. Happy to second.
Lovely, thank you. Okay.
Okay, thank you, Chairman. So, Councillor Mrs. Blockway.
For, Chairman.
Thank you. Councillor Kendrick.
For.
Councillor Macy.
For.
Councillor Marfleet.
For.
Councillor Mrs. Newton.
For.
Councillor Oxby.
For.
Councillor Parker.
For.
Councillor Pepper.
For.
Councillor Rowe.
For.
Councillor Strangle.
For.
Councillor Ray Wotton.
For.
Thank you. That's unanimous, Chairman.
Thank you. So that's agreed, and that's what will go to the executive next Tuesday. Okay. So same team still in place for agenda item 12, which is the capital budget monitoring report for quarter 3 of the current financial year 2021. We've got to consider the report, whether we support the recommendation and additional comments. So back to you, Michelle. Thank you.
Okay, so this will be fairly swift, I think, Chairman, because there's not been a great deal of movement from the quarter 2 position that we've reported previously. So as set out, the report will go to executive on the 2nd March and the board are asked to provide any comments. The report starts at page 197 of your reports pack, and we are currently forecasting an underspend for the current financial year on a capital budget of 18.5 million, which is broken down to our block schemes, which is kind of ongoing maintenance and ongoing budgets of 5.1 million, and our projects an underspend of 13.4 million, which is a movement of about 13 million in total from the quarter 2 reported position. The key variances on the current year and key movements from the quarter 2 report are that we are now forecasting an underspend on the highways asset protection block, which is an underspend of just over 3 million. Related to more weather-related conditions, I think, in terms of their underspend and some slippage on the work that they're doing on highways asset protection. We're forecasting an underspend on the commercial area for broadband of 4.6 million, which is in relation to service credits in support of the contract in place there around broadband provision. We've previously reported variances on the two major road schemes in the programme. So the Lincoln Eastern Bypass is forecasting an overspend on the profile for this year of just over 5 million, and a whole scheme forecast overspend of 8.7 million. But members will be aware that that has been addressed as part of the budget setting, and the report and the budget that was approved by council last week is addressing the issue of the overspend on the LEB. And likewise with Rantham Southern Relief Road, there's an underspend forecast in the current year of 14 million, but whole scheme overspend forecast of just over 8 million. And again, that was addressed as part of the budget papers seen by and approved by council on Friday. The only other thing I will mention is that we are identifying some specific COVID related costs in terms of delivery of some of our capital programme, in terms of extra measures and social distancing measures that are being put in place. And those costs are being captured in the revenue report. So we're capturing those, and we're using the COVID grant to support some of the additional costs that are coming through on our capital programme in relating to additional costs being incurred because of COVID measures. But I don't have any other areas to highlight, so just pass back to the board now for any questions or comments. Thank you.
Thank you.
None recorded.
Right, I heard. Okay. Can I take up the question of the capital programme in relation to particularly highways? There has been discussion within the executive, I know, and scrutiny about the way that we can better manage highway schemes. And I wonder if anybody could perhaps help Andrew or yourself explain what process we're beginning to get in place. Councillor Hill and I go back a long way in terms of the 1990s with what used to be called the Capital Monitoring Committee. And it's been mentioned, and I'm not saying it's going to be exactly in that stage because that was many years ago. But I just get a feel with looking at this, and it's not the COVID issue, it's the way, and it just seems before we move on, and this is the last report that we're going to get under this administration before the election, if we could look to the future and have some expectation of a different form of monitoring by members to try to ensure closer relationship between the budgeted amount of money that's allocated and the outcome. So perhaps you could tell us about thinking that's going on behind the scenes.
I certainly can. I can highlight some of the work that's already being done. So members will be aware that as part of the capital strategy that gets approved by council, we've added some measures in there in terms of an officer capital review group that's providing some a peer challenge, I think is probably the fairest way to say, and some cross sharing of looking at business cases and considering, getting that overarching kind of view about whether the budgets and the purpose of the projects are realistic, and trying to overcome some of these issues in terms of expected costs. I think probably fair to say in terms of the highways major schemes, we've not always narrated very well what some of the risks are at the beginning of a project. Definitely something that we'll have in place for schemes like the North Icon Relief Road, and the executive board have already kind of started to talk about risk profile there, and how we make sure people understand some of those risks. And not all of them can be mitigated, especially earlier on in the project, and especially when you're dealing with third parties such as utility companies and Network Rail. Some of those are more difficult to mitigate, so there needs to be a better narrative with members about the risks involved in some of those projects, and we're trying to filter that through into the reporting that we're doing. Quite happy to take any further feedback from members if there's specific areas that you feel that you could be involved in that process that would help you to understand better some of that risk profile, if you like, and forecasting and budgeting in terms of what you'd like to see. I don't know if Andrew wants to come in and make any other comments about the capital review group or where we can go with members with that.
Nothing.
Put you on
to
the
add.
spot there. Sorry, Andrew.
No, it's okay. No, it's fine. No, nothing to add to what you said, Michelle. Councillor Parker, does that sound like what you were sort of hoping to hear? I guess is the first bit around.
No,
first stages. No,
I heard a lot about review groups from officers, senior officers, peer review, etc. I heard members of the executive, but that only takes of the elected members. Still leaves 60 people who work on scrutiny, and I'm thinking, although I used highways as my example, but the same approach to scrutiny of capital expenditure needs to go on within all of the scrutiny committees, particularly highways. And I didn't hear anything about any novel or new arrangements that are being put in place in order to I'm going to use the word beef up the scrutiny of capital schemes in the scrutiny sector.
Mr. Chairman, is it okay if I make a?
Yeah, Andrew, respond first, and then certainly Mark.
Thanks, Rob.
Okay, yeah. So, well, I'm just trying to think that through on the spot, Councillor Parker. So clearly, we've got this process here, which is designed to provide. Well, obviously, this paper is supposed to elicit that scrutiny as an initial point of view. I think if we're talking about specific schemes, I'd probably ask if we could take that away, just to understand about because clearly, if you were wanting to look at a big scheme like the Lincoln Eastern Bypass, for example, there's nothing to stop you doing a specific focused review on that, is there? As a with the scrutiny work groups that we have that feed into this, and clearly the capital review group could support that process because that's members then getting involved in a particular item. Is that more where you're heading towards?
Well, and I do want to bring Mark in. So, but
yeah.
Here we are,
Mr. Chairman. Could I just come in, please? Because the North Icombe Relief Road has just been used as an example of how things might change. I probably need to just declare my interest in that. I had checked, it wasn't there before, and I think I need to leave. So thank you very much, and I'll leave for the rest of the meeting.
Okay, thank you, Steve. A, for making the point, but B, thank you for attending. Okay.
I think the other point I'll just make, Chairman, is that these specific schemes are being monitored through their relevant scrutiny committees. So I'm sure that the special schools item will have been looked at by the Children's Services Committee, Scrutiny Committee. Likewise, highways will have seen papers on updates on specific road schemes through their scrutiny committee. So I suppose it's about how that kind of feeds into the overarching programme and the review of the overarching programme.
You're right, and I just want to make the point before Mark comes in that for example, the overspend of 13 million at 1.8, and then it sets it out. It would be good to relate to OSMB what's happened in the scrutiny committees for that, so that we sitting here know what's already happened. Okay, because at the moment there's little we can do other than note an underspend of 13.4 million and overspent in different places. All we can do is note it. We can't take any action on it. And the action is further down the system, isn't it? Earlier in the system when it should be happening. And that's what I was particularly interested in. Sorry, Mark.
Yes, thank you, Mr. Chairman. Thanks for the opportunity. I mean, when I obviously I've been the support councillor for finance resources now for about 5 years, and certainly in the very early days, the very early days of this 4-year term and period, I got involved in looking at a lot of the business cases and stuff that were coming forward, and also revenue. And one of the sort of issues we had was that there was no sort of standardised sort of form for the paperwork to actually look like. So different business cases were coming, and some were better prepared than others, some had more information than others, and whatever. And I did work with Sophie Reeve and Michelle, Sue Maycock, and a few others to try and standardise some of these forms that are used. So that when a department is pulling up a business case, it knows what the Scrutiny Committee and also the board, what they need to see contained within that. And so that was a very much an iterative process. We sort of went through and we proposed what we thought were some standardised reports. They were sent out. Senior managers had look at them and fed back, and that's gradually been implemented. And certainly now the business cases come in a far better format and contain a lot more information than perhaps they did in the past, which I think is progress. Allied to that was the setting up of the capital review group of officers of senior managers, and of course they were then seeing all of these new business cases in the new standardised format, which again I think they meant that that they were hopefully getting all of the key information they needed in similar reports that they themselves were used to or becoming used to. I think that a lot of those then subsequently, the business cases subsequently do go to the scrutiny committees. I mean, I'm on children's, and we certainly have done some very thorough reviews on children's into some of the new SEND schools and made quite a few comments back. And actually, the quality of those business cases in terms of the content has improved over the process. As I think this process of improving the information, the information is coming through. So I think progress is being made on that to actually improve the quality of the information. In terms of scrutiny, one thing I sometimes get a little frustrated with when I sit on a scrutiny committee is that I get the impression that some members maybe feel they don't have the confidence maybe to sort of interrogate a lot of quite a lot of the detailed financial information they're actually receiving. And I know, Councillor, Mr. Chairman, that when we did our scrutiny review a couple of years ago, and both of us were on the panel that looked at that, I certainly made the point that I thought the financial training for members should be, my own personal view is it should be mandatory if you sit on a scrutiny committee. But that view wasn't adopted. But I think financial training for members who wish to sit on scrutiny committees should be positively encouraged to enable them to give them the skills to interrogate not only capital projects and business cases when they come before their committee, but also a lot of the sort of the data, the quarterly monitoring reports as well. Thank you, Mr. Chairman.
Thank you. Okay, so.
Chairman, I've got Councillor Rob Kendrick wishes to speak.
Good. Rob.
Thanks, Mr. Chairman. Just wanted to pick up on what Councillor Whittington has said. Yes, in the case of schools, Children and Young People's Committee, which obviously I'm chairman of, we have had occasion where we've had some quite forensic questions asked about some of the reports, because, as Councillor Whittington said, in regards to SEND schools, we did send some comments back. Then, for example, we wanted more detailed explanations on how things were contracted and so on. So, yeah, I mean, I think in some committees we do try and drill down on these things. So, I think that's just a general observation that in one particular committee, I know we have had experience of doing that. And perhaps, as Councillor Whittington says, maybe we could all do with a little more training on this, particularly when we move into the next cycle. Thanks, Chairman.
Some good points being made there. I mean, before I move on, anyone else wants to speak?
Yeah, Chairman, Dr. Andrew Crookham would like to speak.
Good. Andrew.
Yeah, thanks, Chair. Yeah, it's just to come back in and wrap up. I think what Councillor Whittington went through there was very pertinent about training, about the processes that have gone in place. And I just want to really, because I know this has come up at the last two times we've been now. So obviously, last time, as Michelle said, we set out about the capital review group and the commitment to go away and look at, lessons learned, and we're starting to talk about that at our next meeting. I just want to be clear because you did refer to looking back as well. So there's a thing about the lessons learned, but there's also the issue about the training as well. So just want to be really clear about which is the focus, or is it both?
Well, you see, the first point, a simple one, is that it would help OSMB members if we had included within these quarterly reports something that's gone on in a scrutiny committee where we don't have to ask the same question because it's already been dealt with. Rob Kendrick just made the point about children's services. Fine. If it's in our report, then that's done and dusted because it's been examined, hasn't it? Okay. The second point about training is invaluable, isn't it? And it's a perfect time because we've got a new council being elected in 70 odd days' time. The third issue is about both looking at, if we get it right through the process, then we shouldn't have to look back, but we still may have to. So it's the ongoing nature of the scrutiny. It's too late when we report an overspend of £20 million on a big scheme to then say where did it go wrong, because that demonstrates a failure of the process iteratively over the last 10 years, really. So yes, we need both, but we need the looking back less, the more effective we are at the current time, contemporarily. Does that make sense?
Yeah, it absolutely does. Yeah, and I guess we obviously there's the commitment within the way that we're setting up the CACA programme now is that all new key decision schemes should be going through a scrutiny process because they are subject to that that executive member sign off. So that should be in place. So I guess with the training, and we'll naturally Nigel talked earlier, didn't he, about the training for new members and the new council, so we can cover that off in some respects. I guess the bit about the looking back, and if you look at the Lincoln Eastern bypass as an example, one bad summer leads to a delay in things that then lead to a knock-on effect of delays with other things. And I guess if the weather event is in the case predominantly with the Lincoln Eastern bypass is the trigger for all of those things that came after that, best will in the world, a scrutiny event at the start of that process would not necessarily uncover all of those sort of issues that subsequently happen, if that makes sense. But that is an exceptional, I guess that's an exceptional project. It's an exceptionally large project, but things like that need to be, I guess, go into the consideration in the mixer when we think about things like the North Highcombe Relief Road and other big infrastructure projects that we might be involved with in future. But
sure.
Yeah.
Okay. Right, is there anyone else who wants to speak?
None at all, Chairman. Thank you.
Okay, so where are we? Capital Budget Monitoring Report, quarter 3. The executive notes the position on the capital programme. I think it's fair to say that we have considered the report. We've determined whether we support the board's the recommendation of the executive. Yes, we do. I think agree any additional comments, and we've noted them, I'm sure, Nick, to take forward. Okay, so
I'll propose that again, Chairman.
Thank you. Seconder.
Chairman.
Sorry, say again.
Rob Kendrick, happy to.
Thank you, Rob. Okay, over to you, Nick.
Thank you, Chairman. Councillor Mrs. Brockway.
For.
Councillor Kendrick.
For.
Councillor Macy.
For.
Councillor Marfleet.
For.
Councillor Mrs. Newton.
For.
Councillor Oxby.
For.
Councillor Parker.
For.
Councillor Pepper has left the meeting, and Councillor Rose declared an interest and also left the meeting at this point. Councillor Strangle.
For.
Thank you. Councillor Ray Wootton.
For.
That's unanimous of those present, Chairman.
Yep, carried. Thank you. Item 13 is for information only. You'll see that we've got one more meeting, and then we've got a gap, and then looking forward to those who are standing and want to be returned. It's an induction meeting on the 17th of June. Okay, so that paper is really for information only. Can I thank everybody, members, for attending, and declare the meeting closed.
Vice Chairman, thank you.
Thank you, Chairman.
Chairman.